Over the last week, Rolls-Royce is up around 20%, which is a pretty big increase for 1 week, especially for this stock. And on the weekly time frame, it looks like we could continue higher. The first half of the year results were published around a month, probably over a month and a bit ago now, about 6 weeks ago. And I've been looking at those as well, and there is some really good improvements for Rolls-Royce. I've just done a post on them online on the website about where I'm looking for in terms of price tag. I thought I'd also do a video because what I find is Rolls-Royce is quite a heavily held stock throughout the UK for people who invest and also abroad as well. It's the 24th of September. My name's Tyrone and you're watching Mini. Jumping straight into the video, the first thing that I want to have a quick look at is the actual financials of Rolls-Royce, just looking at the numbers that they released for their half-year results. Generally speaking, looking at them, they've done quite well because in the past they are known to be a loss-making business, yet surprisingly so many companies and so many certain individuals hold this stock in their portfolios, and I think one of the reasons for that is because of the market that they're in. When I'm looking at a share, one of the things that I don't like to see is negative assets, negative liabilities, where you've got more debt than what you have in assets. But Rolls-Royce is one of the cases of one of those stocks which has that. Yet, needless to say, I would actually buy it given these results that was published sort of in August. So looking at them, you've got a £5.1 billion turnover, which is a reduction from the previous year, but the profit after tax was 394 million as opposed to a 5.2 billion pound loss first half of 2020 as opposed to the first half of 2021. But there's a bit of an issue in that, and that is that 280 million pounds did come from a tax rebate, so it wasn't actually all profit, that was essentially a rebate. But again, I'd have to probably dig in a bit more as to why they got that, or given the pandemic, maybe it's just a relief or something like that. Cost of sales is down as well significantly, so that tells me they've been doing some improvements across the board. So I get that the turnover is down, but if we look at last year, first half, you did 5.6 billion with a 6.2 billion cost of sales. So even before they'd even paid staff and other sort of operating costs of a business, they was already losing somewhere in the region of around 600-700 million pounds, whereas now they've improved that, which is a good improvement. And I did read at the top that they had been able to save around £1 billion in costs because of the pandemic, figuring out how to do things cheaper, which is what you want to see, especially in a business like this, which means I think going forward, one of the reasons why this might now be a good share is because they've been able to use the pandemic as a reason to improve their business operations. Now, looking at the balance sheet, we've got a few issues, I guess, but nothing that I would say is a concern. Assets are down to 28.7 billion from 29.5 billion. Liabilities are down from 33.3 billion, to 33.3 billion from 34.4 billion. So we have seen that improvement. Cash on hand is down around 500 million pounds. But again, I'm not too concerned on that. Now, looking at the numbers, one of the things I just reiterated a minute ago was about assets to liabilities, and essentially the ratio last year for their assets to the liabilities to assets ratio was 116.5%. So on 2020, there was 116.5%. They're currently trading this year at 115.9%, which is a slight improvement. So despite the assets going down, the liabilities have fallen ever so slightly more, which is good to see. And on top of that, you've got the company turning a profit of only just take away the tax rebate as such, they've made a profit of somewhere in the region of 114 million pounds. It's 114 million pounds that they've made, and it's money that they're making. And if they can continue that into the back end of the year, I think as lockdowns are eased and as flight travel returns and air travel returns, you're going to see Rolls-Royce do quite well, because I think that your demand is going to pick up. You've had a lot of planes that have been sat in hangars that are going to need servicing before they can be used. So it's a good reason for Rolls-Royce to get out and sort of increase their income that they're going to get. Now, looking at the chart as well, it's looking really good. So one of the first things that I noticed was there was a downtrend, and it was actually going, from beyond the pandemic. The pandemic was just a reason for that to sell off. So you can see from here, from almost 2019, and you could argue it could go even slightly further, and you could say it was there, and that we've got a trend line coming up there, or you could say we've got one, potentially there. So it depends on how you want to play that bit. But underneath, we also have support as well, similar to how we've got that resistance above, and that sits there. And I would rather be a buyer than trying to short or sell this, as I do think that, looking at the chart, we're going to go a lot higher. So given that we've got this trend line here, which is one that I've just put in place, there is another one there. Your first target for here is going to be in the region of around 140 to 143, which is a nice increase from its current price. A break above there, so we head up to there potentially, and then we might get that pullback, and that pullback is going to be the opportunity where you would look to potentially place a position. So buying in now would be quite risky by all means, and if you're in already, that's great, but buying in now is risky, or it means you could be sat on a loss for a couple of months or a couple of weeks before we go higher. Coming on towards the back end of the year, I do think that Rolls-Royce will head towards that £2 region, and if we don't get there by the end of the year, it could be maybe Q1 of 2022. That would be the target. But ultimately, you've got your support all the way down to exactly £1, and as long as the £1 doesn't break, I think that £2 is a reasonable target for Rolls-Royce. Now, I will be tracking this stock very likely on the website, and if anything changes, or if the stock does fall and I do personally enter it, I'm sure that I'll probably tell people about me entering it. So if you like what you're seeing, please like and subscribe and just keep updated. And if I do choose to invest in this, you'll be able to see where my entry points are and what sort of targets I'm aiming for. But again, targets are 150 followed by 189, and then that £2 level, which might take a couple of months, but overall it's looking very good.